Melanie Rupp spent nearly 2 decades in senior banking before making a deliberate choice to put that expertise to work for women entrepreneurs instead. As Senior Director of Loans and Advisory Services at WeBC, she spent 15 years helping founders get financially fit across capital and build businesses that actually last. I'd like to welcome everyone today to the Heart of Food and Beverage. Today we have Melanie Rupp from WeBC joining us. And you may be wondering why we have taken a bit of a turn and not just focusing on brands. We have done that for quite some time, over a year now. We focus just on brands, but we've decided to bring in folks that are really supportive of our brands in the industry, and we want to kind of pick their brains and understand a little bit more about why they feel it's important to support local products and businesses, and advice that they can bring to the table for us. So welcome, Melanie.
Thank you so much. Great to be here.
Having a business, and I feel like just because I've coached so many people, I feel like they have had a similar experience of that feeling of like, I can't not do this.
Right.
You know, like I have to do this. It's like a kind of a calling.
Yes.
And, you know, and little did I know that the calling for me was going to be to actually fail, right?
Yes.
The calling was to do this.
Okay.
In order to fail.
Yeah.
In order to be able to help other people.
Right. Right.
So I didn't see that at the time.
I love that.
But I see that now.
Yes.
And so for me, you know, we started our podcast with really focusing on brands and them telling that kind of story. And it's why we call this the Heart of Food and Beverage. It was for them to really tell their stories around that feeling of like, I had to do this, you know, and then here's all the things that happened to me along the way. And we've pivoted a little bit to start to bring in folks like yourself to talk to those brands.
Yeah.
Because I think it's good for people to understand the community around this, that it isn't just them, that it is very lonely being a processor, but it isn't just them. There are so many people around you that care. And sometimes that's hard to see when you're in the middle of this stuff. So we really felt that it was important to bring you folks into the conversation around why we care and why we want to see you succeed and this industry succeed. So I'm really pleased that you're here.
Thank you for having me.
Yeah. And just to maybe tell the folks that are listening a little bit about why is this important to you? You were speaking before the podcast started about how you don't just represent food in your business at WeBC, but you're really spending a lot of your time outside of work hours supporting businesses through either investment or showing up, right? You're showing up. You're showing up to events and supporting.
Yeah.
So can you share with us why that is, why it's important for you?
First, to tell you a little bit about WeBC, in case people don't know, we are a not-for-profit funded primarily by the federal government, and we've just celebrated our 30-year anniversary. So we've been around 30 years supporting women entrepreneurs in BC with not only loan funding, but also wraparound support, training, mentoring, skills development, and advisory services, and then the loan program. So for me, I was in lending in a big bank, and I had a portfolio and all male business owners and CFOs. And I said, women can start and grow successful businesses. They just need to know how. And so eventually that led me, like you, I had a calling to support women entrepreneurs because I saw women in corporate really struggling to be recognized and progress up the corporate ladder. And I thought, well, if they create their own businesses, they can be their own boss and they can make up whatever business policies and rules they want. And so that was where I left to start with women entrepreneurs, and eventually saw a posting with WeBC for a business advisor and started there just so I could help more women entrepreneurs.
And so what was the timeline of that? How long did you work in sort of a traditional lending
Traditional
setting?
lending was, and not all lending. I had a great career in the bank for 17 years,
Yeah.
and then I was on my own for since 2004. And in 2018, I joined WeBC as a business advisor, and then eventually stepped up into the senior director of loans and advisory services, overseeing the loan fund when the person who had that position left. And I said, "Well, I come from a banking environment and I have all this experience," and so it's really awesome and amazing to be in this position because we have a loan fund, we have loan policies and guidelines that we need to follow, but we also have a lot of flexibility. And so we exist because traditional lenders won't always fund women entrepreneurs in the early stages and sometimes in the growth stages. So we talk about women struggling to go to financial institutions, and if you don't know, the research shows women don't want to go to banks. And it wasn't long ago where women had to have a co-signer to get a credit card or a loan. It had to be a male relative that could even be their son.
Right.
And that legacy persists in the systems, even though it's not meant to. And so we exist because we can fill those gaps. And we have great situations. For example, a company comes to us, they've gone to a bank, but one of the founders doesn't have a good credit score because she's gone on maternity leave, or they may be an immigrant and don't have a good credit score. And so we can fill gaps. If the business plan is viable and makes sense, we can fill that business funding need.
Okay. And how many people come to you that just don't have a business plan?
So in order to get financing, we must have a business plan and 24-month cash flow projections. So by the time they come to apply for financing, most people will have a business plan when they apply, or want to apply, or feel they're ready to apply. But the problem is that the business plan is not complete. It's incomplete. It may be missing primary market research. It may be not demonstrating viability. So there's a lot of gaps in it. And we have a tool, it's just a document right now called How to Write an Effective Business Plan. Just goes through all of the criteria and all of the sections you should include in a business plan. And so that's what we look for when we're going through the business plan. Have you included your resumes to give us your background? Have you got a marketing plan, an operations plan, an HR plan? And even if you're small, all those jobs have to be done. It may be done by the founder in the beginning, but we need to see that there is the plan there, because that's what demonstrates viability. And then we can lend on the basis of viability.
Right. Okay. And I'm curious, just when you were started out talking about this and you were talking about women and being sort of fearful of going and getting loans, I've been hearing about this now for, I don't know, since I lost my business, which was in 2011. What is the change now? Like, if you want to say the last 10 years in women getting loans successfully, has it increased exponentially or not?
Not.
Okay,
Not.
that's sad. So
Yeah.
So why
and so
is
the
that?
reason that I can say that is because we have currently a project ongoing that's funded by the Wage and Gender Equity of the federal government to look at creating a more inclusive lending environment. And we are working with credit unions around the province. So we've got select credit unions that they're partnering with us on this project. And it's a 3-year project. And the first step was to do research with women entrepreneurs to tell us about their experience going into financial institutions, and were they successful? Were they happy with the experience? And just to get that feedback, because this research will then be published, and we're just about ready to publish it in the fall. And that's leading up to a conference in February with financial institution relationship managers that are dealing with clients day in and day out to talk about the research, to hear hear what the women are saying about their experience going into a financial institution. And what we see in our portfolio is women entrepreneurs are a good credit risk. Our loan write-offs are very, very low.
Wow.
And so we're not afraid to lend to women, even in a startup situation. And for financial institutions, not only can they provide credit products, but all of the other ancillary products that women need, wealth management, credit cards, and so on. And to show them that women are a good credit risk, it is a good business opportunity. And I think back to my days when I was in the bank, my portfolio was all male business owners and CFOs. And even today, when you talk to women who are in commercial lending, which tend to be the bigger accounts, but still, they don't have any men in their, or any women, in their portfolio.
So
it's all men.
So you're saying that there also are no tools there. So it's like if someone's going to a nationally chartered bank, going to get a loan for their business, there's really no tools there to support a woman. But if you go to someone like WeBC, you're getting, as you said, wraparound services. So you're getting a much more supportive environment. So okay.
So part of the work that we're doing with this project and have been doing always is partnering with the traditional financial institutions. So that if they can't provide the lending products, they can refer to WeBC. They can refer to WeBC for the wraparound support, helping them get ready with their business plan. And maybe we provide that first startup loan, and it's a 5-year term loan. And then over the course of 5 years, the entrepreneur can work with their financial institution where they do their day-to-day banking to build the relationship and then eventually get follow-on lending products.
Okay.
So I would add on to that is what we see in the research, and this is kind of interesting for me because we have funds available. We have a $5 million loan fund, and we have funds available to provide loans to businesses, majority women-owned businesses. But when women come to us, they're not always ready, or they don't always know how to access that capital. And so we need to provide the wraparound support, the hand-holding, helping them work on their business plan and their cash flow projections, explain to them how the loan assessment process works. And that's all very time-consuming. And back to your point about the financial institutions not really having tools if you want to apply, it's very time-consuming. And really what they're trying to do is grow their business and do more loans. They're not compensated to spend a lot of time with the client unless it's going to lead to more products, basically.
No, and I think the other thing that's really interesting as well about the national banks is that a lot of times there isn't the expertise there in food.
For sure.
And so you'll go into, so this happened to me personally, that I went in to get a loan to improve my kitchen, my commercial kitchen. And they considered my business to be a food service business and said, well, we don't really want to support you because you're like a restaurant. And I thought, I'm not a restaurant. So I think it's challenging. And so, this is something that I have to advise women-owned businesses as well, that you have to be careful the way you position your business, because if they at all think it's food service, you are out of luck. They're not going to give you any money whatsoever. So,
So from my experience being in a big bank, they have a loan policy, and who they're willing to lend to varies over time. They look at each industry and is the industry trending downwards, and are there a lot of failing businesses in that industry? And so they tend to shy away from those industries. So you'll want to get financing and you happen to be in that industry, but they're not open to lending to you. And I have to say at WeBC, we are open to all industries. And because of my experience in financial, in the bank, and knowing that it's just not fair. where you say you won't. So, I mean, we certainly have to look at the balance of our portfolio and if there's issues, but we're focused more on the viability of the business. And if you have a viable business in any industry, even in the food business, it doesn't look like food services or a restaurant or hospitality, which tend to have difficulty getting financing.
What about, you mentioned that women pay their loans, like that they really do pay their loans. I had been interviewed after my business finished, and it was someone that was doing research on women and lending.
Okay, I love it.
And they had asked me, how long did you last? 5 years, all the questions that they asked me. And they said, oh, I'm sorry, you're just like every other woman business that does not succeed. And they told me that only 5% of women-owned businesses ever make it over $1 million.
Right, yeah.
And they said that the women tend to hang on for a very long time. They economize too much.
Yeah.
Because they know how to stretch, right? They know how to stretch things.
Yeah.
And so they stretch themselves, including their dollar as well.
Yeah.
And so they end up lasting longer, but still flaming out. And that men will tend to take a lot of money and throw it at something. And they'll either take off really fast or they'll flame out really quickly. So I thought that was really interesting. I don't know if does that resonate for you at all?
Yeah, for sure. It resonates with me. It resonates for me that women, even when they go to a lender and ask for money, to a traditional lender, they typically get less than what they asked for. And so
that happened. Yeah.
And so they're having to start with less. They're having to utilize more of their own resources. And it tends to maybe lean in towards credit card debt, which is widely accessible and very, very expensive.
Right.
And so they're undercapitalized from the beginning. So then they don't pay themselves.
Right.
And they work for free for a very long time. And they don't have the professional expertise and advice, whether it's, an accountant can often do that, or an advisor, someone who's familiar with the business model that they're working on, to see where the problems are and to give them advice. We see businesses where every dollar that they spend with their marketing agency, they're losing money. And they don't know that because they can't see the numbers.
Right.
We're just working with a client who's applied for a loan and doing a very successful business, but she's taken on a lot of debt.
Yeah.
And the debt has grown, but the revenues have not grown as much. I mean, a fraction of the debt that she's taken on.
Wow.
And so she's servicing all of this debt without getting the return on that debt.
Right.
Without getting the increase in revenues and the increase in productivity.
So what do you suggest to somebody like that?
So for us, it was, when we do a loan assessment, we're not a formula lender, we're a viability lender. So a formula lender, you go online and you put in your information and they look at your personal net worth, they look at including your collateral, they look at your credit score, they look at your historical income, and they say, yep, you qualify, here's your money.
Right.
And they don't care what you're going to use it for. They just want you to pay it back.
Right.
Whereas we look at it and say, okay, how much, what are you requesting? $100,000. Okay, let's take a look at the business.
Yeah.
And so our business advisor was doing a deep dive into the client's numbers, and it's an existing business. So we're able to look at historical financials and come up with an analysis that says, that your fixed expenses very high in the area of payroll. You've taken on this debt.
Yeah.
You are not increasing your revenues. So then the conversation from the founder is, well, I've invested in all of these things and I've got all these opportunities available to me. And so we were able to see the way forward, but in the growth plan that was provided, that wasn't clearly explained, which is the reason we had to question it so deeply.
Right.
So our loan process, being a viability lender, will take 4 to 6 weeks with all the information.
Right.
And we really do a rigorous process. And one of my business advisors told me yesterday, remember that client that we turned down? she came back and told me we had to decline her because they were the budget was so big for what they were trying to do,
Right.
and the business really wasn't able to debt service it, and they were going into a new space and doing leasehold improvements, but had zero free rent and zero tenant improvements from the landlord. And so the business advisor happened to be talking to her again, and she said, "Oh, when you declined us, our landlord gave us free rent, and we ended up getting like $200,000 worth of free stuff because you wouldn't give us the loan."
Wow.
So it really can be very painful, I admit, when we are rigorous with our questions, and we'll ask you many more, hard questions about your business.
Yeah. But you should. Because if you can't defend what you're doing.
Yeah.
Yeah, like it's tough, but
it is tough out there.
As a business owner, you have to be able to say, like, I think this is, I feel that this is a logical, path, and that we're going to see this kind of return. And
yeah. So we are rigorous with all loan applications. Certainly over 50,000, get 50 to 150,000, which is the maximum we can do is 150,000, is very rigorous, I would say, because you're asking for more money. You need a higher cash flow to debt service. So we want to see that. Up to 50,000 is a little bit easier. I kind of consider it a car loan, that if the business doesn't work out, you can pay it off yourself personally. And to your point, you had to start your business to fail in order to do what you're doing now.
Yeah.
And so we know that not all businesses are going to succeed.
No.
And the flip side of this rigorous analysis is we've had a couple of loans that within a year have said, white flag, I'm done. I'm shutting down my business. I'm selling my food truck.
Right.
It's too hard. And so we don't want to say no to somebody's dream if we can see any sense of viability there that they could make it work. But even when we support a loan, people still come back and say, I couldn't make it. It was too hard. It was too exhausting. The competition was too tough.
Well, that's really common that people have stars in their eyes when they start a business. Otherwise, no one would start businesses if they didn't think it was going to take off.
Yeah.
Right? That's most people.
And I see that very much in the food business.
Yes.
Followed a lot of brands over the years, and also knowing a little bit about the inside of how they're funding their venture, how they're moving into new markets and retreating from new markets. It's really
it's pivot. Like, look at what's happening with the tariffs, right?
Yeah.
Like, that's not a great market to be jumping into right now. The U.S. market is really a big unknown.
Yeah.
So now where do we go? International. Okay. It's pivoting constantly.
Yeah.
And I think the other thing too, that about food in general, and this is going to bring me to another question, but food tends to, people will put together a forecast, they'll say what they're going to do, and then, they'll run out there and they'll go to trade shows, then they'll go to do sales calls, and they'll say, I got this listing, I got this listing, I got this listing. And then it doesn't happen. It takes 6 months, it takes a year, whatever. So what their projections are don't match the timing.
Yeah.
Right? That's a really challenging thing. So this is so common in the food industry. I can't tell you, especially people that really focus on grocery.
Yeah.
That listings don't come in that quickly. And so I would ask a question, how does WeBC see someone that has already had a loan, to start their business, and they're going and they have great opportunity, and they're having great feedback and acceptance, let's say from retail or from market channels, but they're not turning on as quickly. So they're not seeing that volume. So guess what happens? They're running out of cash.
Right.
So they're in this rock and a hard place where what they said originally when they were going to do their business plan was, I'm going to be break even by a year and a half or whatever. And they're not.
Right.
But they do have listings coming in,
Yes.
like all these things, and they're in a cash flow
Yes.
crunch. So what do
Yeah,
you,
yeah.
how do you advise those folks? Because I know a lot of them are listening to this.
Well, that's a great question. So I'll tell you how generally we might look at this kind of situation, and I can actually think of one, and it's a loan that we just approved, and it was
Okay.
for $50,000.
Yeah.
So if they have funding elsewhere, we look at the total debt that they currently have. So what's the debt load and their ability to debt service and to cover all of their expenses? What does those cash flow projections look like?
Mhm.
And what is the plan going forward? So we've seen situations where they're kind of in that place, and we ask them, well, what's the plan? Like, if you can show, look, I've got the listings, I've got this, and you can see the roadmap,
Yeah.
and you can see it's just going to take a little longer. And you can see that the business, they're not currently over leveraged, and they can manage an additional $50,000 in debt. We can do interest only. We prefer 3 to 6 months,
Yeah.
but we have flexibility.
Mhm.
If it doesn't, well, can we go to interest only payments? And I think if you already have existing debt, is go to your lender and tell them what the story is, but you
Yeah.
want to show the roadmap. You want to say, look, here's the situation, but here's our plan. This is what we're working on, and this is how we're going to get out of it, and this is what it's going to look like. And so it's, we're going to struggle through 3 to 6 months,
Mhm.
but after that, then we're going to have things starting to flow, and we have this consistent cash flow to service the debt.
Right.
And most lenders will have some flexibilities because all lenders want their money back.
Of course.
And so they don't want you to shut down and walk away. They don't want to make you bankrupt, force you into bankruptcy or a consumer proposal where they get nothing or very little.
Mhm.
They want to support you through it.
Right.
But as the founder, you are the leader, and you got to tell them what's the plan and how you're going to get out of it.
Okay, this is a great thing to say, because you just got me thinking about how a retailer said to I had the
Yeah.
conference last year,
Yeah.
and he got up and he said, I don't want you to make a plan and then get 2/3 of the way through that plan and say, oh my gosh, it's not working, we're not getting our sales, and just pretend that nothing's happening until the year ends and you got to come back to me again and talk to me.
100%.
I want you to talk to me as you're going along
100%.
and you see problems coming,
100%.
then tell me.
100%.
So that gets me thinking, is this the same for you
100%.
then? So if you have a loan from WeBC, you develop this relationship with your lender where you can go to that lender and say, hey, we're in our first quarter, here's our numbers, here's what we're doing. Like, do you encourage that? Do you encourage them to really have this ongoing relationship with you, to share with you your successes and your failures, or your challenges, I should say?
100% with WeBC, because we're not charging you by the hour.
Right.
You have other advisors around you, but every time you pick up the phone, you kind of go,
yeah.
And we don't do that. So take advantage of that opportunity.
That's so good to know. I never even thought about it that way. And I've been teaching for years and coaching for years. And I've always seen sort of on the finance side, it's like always the same kind of like this, sort of big question mark, sort of. And now I feel like it's kind of a misunderstanding, really, in that you do need to think about it like someone is lending me money. It could be like a family member. Would you feel beholden to that family member to tell them what's going on? Yes, you probably would. You'd probably have no problem saying to the family member, I know you've lent me this money,
Yeah.
and this is what's happening,
Yeah.
and I'm having challenges,
Yeah.
and whatever. And this isn't really any different. It's saying they're your partner in this.
Yeah, don't hide anything.
Yeah.
Because we're going to see it in the numbers.
Going to see it anyway.
I once listened to, they were lawyers talking about bankruptcy and consumer proposals and blah, blah, blah. And so they went through their presentation. And the number one takeaway for me from that presentation was talk early about the problems, because that gives you more time to deal with them. If you just ignore it and hope it's going to fix itself. You get closer and closer, and the closer you get to the end, whatever the end is, you run out of options.
Can't do anything.
Yeah. But we have a lot of options to work with the client when they are struggling. And, the big question when my business advisors say, oh, so-and-so is struggling or this and that's happening, I go, okay, are they still in the game? Do they still have the energy? Do they still want to do it? And if you still want to do it, okay, well, let's see how we can help you.
Right.
And we'll work with you. But if they
there's
throw
no
up the
helping
white
someone
flag,
that's throwing up
like
their
if you're
arms.
exhausted and you can't do it anymore, it's like, okay, well, let's talk about how we wind this down.
Right.
Yeah.
Wow. Well, I feel like my eyes have been opened today. I have to say, I think that's it's great advice. I'm probably not as great for the men that are listening, but certainly the women.
It applies to all entrepreneurs.
What's that?
Right? It applies to all entrepreneurs.
Yes, it does. But I mean, I think what I'm hearing from this is that WeBC really has those support services to really walk along with them. And I'm not sure if I'm not sure if that applies to a financial institution, national bank. Can you go to your banker and just say, hey, I'm not doing well, or here's my numbers? Some banks ask you to share your financials. Like, I know that.
It's a requirement if you have financing.
Oh, okay.
So for us, we'll require, if it's an early stage company, we'll ask for quarterly financials.
Yeah.
And then the business advisors will follow up. And in one case, she phoned the client and the client was kind of hesitating. And then she goes, do you know how to get your quarterly financial statements?
Oh, wow.
And she said, yeah, no, I don't. So, just setting up your bookkeeping, making sure you're tracking your numbers, making sure you know your numbers, making sure you can look at those monthly financial. Like, I love looking at monthly because your financial statements tell a story.
They tell a story for sure. Yeah. Wow.
And people who know how to read financial statements can read that story.
Right, for sure.
Yeah.
Oh, interesting.
Yeah.
Interesting. I want to pivot a bit and just talk about you personally around the food industry and kind of because I know you're doing loans for everything.
Yeah.
What do you love about this industry? Why does it resonate for you personally?
Yeah, I think that's a great question. I was thinking about that. Where did it come from? And I have to say, I was on a flight, I think from Germany to Zurich on a Swiss Air, and they serve you some sort of quick meal. And I looked at the meal and everything was from Switzerland. The butter, the yogurt, the cheese, the bread, everything on that plate was from Switzerland. I thought, how great is that where they're supporting their own producers? And so, fast forward many, many years, and I started seeing and working, with you, and my eyes opened to all these brands. And maybe the first one I have to say is I used to work with Marissa Miles from Tree Island. We worked together at the YWCA. And so I saw what she was doing, and I followed her story from the beginning.
Yeah.
And that's probably what opened my eyes to local producers and food. And then my own personal focus on eating healthy and, not eating processed food and seeing what the big conglomerates are doing and taking our water and, bottled water and stuff and all of that. And it's so it just shifted me towards the local food scene. Yeah. And then the connecting it, many of them came through WeBC or I'd see them at events. And so now when I think about it, I just... my yogurt, my smoked tofu, my ice cream, everything is all local.
So it's got you more present with looking at labels and where these things come from and keeping it more on your radar.
And how lucky we are to have all these great products. I mean, amazing products. Yeah. And so I get so excited about that. I get excited about helping them expand and, go down to the States and expand internationally if that's what they want to do.
Yeah.
Like there's just even across Canada, and yet getting to know the founders and hearing their journeys and how challenging it is. And, I just show up at these events because I can't be calling them every week and going, how's it going? How's it going? Because you go through peaks and valleys. It's a roller coaster.
Yeah, it is.
And so I just want them to know that I'm here.
Yeah.
I'm money, my thing, helping you get access to capital.
Yeah.
If you want to talk about that, I am here, and you know where to find me at WeBC. And
I mean, I will say, I think you're one of the, like, I would say there's about 5 people that I would name off the top of my head that I think are really invest their own personal time. They're not getting paid for this. Like, you're out there not getting paid for it, but you love being there in and among these. Yeah.
Brings me joy.
And you know what? The funny thing is when you mentioned about the Swiss Air thing, the Swiss apparently are just like adamant about supporting Swiss products. Like it's actually not just like it really is kind of that country in itself that really has doubled down on being extremely supportive of their own produced and processed products. So, I mean, we can learn something from this. I think we kind of are. I can see that particularly in BC, where I see how things are opening up so much just on the market channel side. I think is really heartening to me. It's really heartening. So I hope we become a Switzerland of support for our brands.
Yeah, me too.
Yeah.
Me too. Yeah.
Okay.
Yeah.
Well, I thank you so much, Melanie, for being here. It was a wonderful conversation. And yes, and anybody that's listening, especially if you're a woman-owned business, please go to WeBC and get some more information if you're interested in loans, especially those with support. And even if you're not a woman-owned business, I think the advice and the information here today is invaluable for your business, and just making sure that you're it sounds like communication is key, actually, here. Communicating with your lender is a really important thing to do. So thank you so much for your time, Melanie.
You're most welcome. Thanks for having me.
You're welcome.
Okay.